Hi, everyone, and welcome to a special mini-series of intentional community conversations with Intend Indiana. I'm Kim Wherry, the residential loan portfolio manager, and I'm excited to share some quick, practical tips to help you feel more confident and informed on your journey to homeownership. We know the lending process can feel overwhelming, especially if it's your first time. That's why we're keeping these episodes short and easy to follow, because at Intend Indiana, accessibility matters. Whether it's breaking down information or creating more affordable housing opportunities through initiatives like our Edge Fund, our community development financial institution designed to make homeownership more attainable, we're committed to supporting you every step of the way. Let's get started. If the word credit makes you nervous, you're not alone. A lot of people feel very overwhelmed by it. Today, we're breaking down what lenders really look at when reviewing your credit, what makes up your credit score, and how to improve it, especially if you're thinking about buying a home. And if you're working with us at Intend Indiana, we'll talk about how we look at credit a little bit differently with more context and compassion. So, part one, what makes up your credit score? Let's decode this. Most scores, like FICO, are made up of 5 main factors. The 5 factors are going to include payment history. So this is going to make up 35% of your credit score. This is the biggest chunk. Do you pay your bills on time? Even one missed payment can hurt, so consistency is key. 2, credit utilization. This is going to be 30% of your total credit score. This is how much of your available credit you're using. Using less than 30% of your total credit limit is going to be ideal. So if you've got a $1,000 limit on a credit card, try to keep your balance below $300. 3, length of credit history. This is going to make up 15% of your credit score. The longer you've had credit, the better. That's why it helps to keep the older accounts open if you don't use them much. If you have a credit card that you don't use, but you've had for 10 years, you should keep it open. 4, credit mix. This is 10% of your credit score. Lenders like to see a mix of different types of things on your credit report. So credit cards, student loans, maybe an auto loan. It shows that you can handle different types of debt. So installment loans, revolving accounts. Number 5, new credit. This is going to make up 10% of your credit score. Opening a lot of new accounts in a short time, that can be a red flag to lenders when they're pulling your credit. So go slow when applying for a new credit card. I know it can be hard sometimes when you get a lot of offers in the mail, but it's really essential to not open a lot of credit cards, especially if you don't need them. Part 2, how to improve your credit. Now that you know what goes into a score, here's how to boost yours. So first, make sure that you make on-time payments. Even the minimum payment is fine. Set reminders or auto pay so you never miss a payment on your loans or your credit cards. Lower your utilization. Pay down balances and ask for higher limits without spending more, or spend balances across cards. Don't close out old accounts. Unless there's a fee, keeping older accounts open helps with your history. And sometimes even if there is a small annual fee, it'll still benefit you more to keep your account open. Limit new credit applications. Each one can cause a small dip in your score, so you don't want to apply for a lot of credit applications in the same time frame. Remember that you can always dispute any errors that are on your credit report. Sometimes mistakes can happen. You can get a free copy at annualcreditreport.com and dispute any inaccuracies. These small steps can make a big difference, especially over a few months to a year. So how does Intend look at credit differently? Now, here's where things get interesting. If you're working with Intend Indiana, you're not just a number on a credit report. So we go deeper and we look at the story behind your credit score. Maybe you had a rough patch, medical bills, job loss, or a divorce. Life happens. So even if it's not your time right now to purchase a home, we're still here to help you improve your credit. We'll look at patterns and where you are now and not just where you've been in the past. You're more than your credit score, and we get that, and we're here to help you. So let's recap. Your credit score is made up of payment history, utilization, history length, credit mix, and new credit. Small steps like paying on time, lowering balances, and checking your reports can go a long way. And if you're working with us at Intend Indiana, know that we will assist you every step of the way to get you where you need to be for your credit to be healthy so you can become a homeowner. If you're ready to get started, talk to us and we can help you with that. Thank you so much for tuning into this special episode of Intentional Community Conversations with Intend Indiana. We hope you enjoyed yourself, and we hope something we said inspired you to want to learn more about the community development work that we do to connect people to opportunity. Please make sure you are following us on social media. Just search for Intend Indiana and visit our website at www.intendindiana.org.